This question required the preparation of an income statement, but it's a budgeted income statement because our topic's budgeting. So it's for the future. And what we have is we're told the business is Slumber City and we've got a 12-month reporting period ending in the 31st of December and we're doing a budget for 2023. So we've got all these estimates for the year of things we expect to happen. And this is question 3D, so on question 3A, B, and C, we did our ledger reconstruction for any numbers that we need. And then we're told about some relevant account balances here. And finally, we're told the bank balance at the end of 2023 is estimated to be an overdraft of $28,500. So use your question to pull in the information. And the question is, prepare the budgeted income statement for the year ended 31st of December 2023. So the way to do this question, my advice would be to go from top to bottom. So know your income statement sections and then use that to drag the information in. So here is all the information. Actually, we were told that bank balance was an overdraft. Bank balances don't go on the income statement, so I've just left it off. So the first thing to realize is that, if you know your stuff, you can make your life a bit easier. For example, here, these relevant account balances. This is a liability. That's an asset. That's an asset. Well, those things actually go on the balance sheet, so I don't need those here. So I'm going to, I can divert my eyes away from them and make my life simpler and just focus on this information here. So the first thing I'm going to look for are revenues, and we can see here it says credit sales are 630,000 plus GST. So I'm going to put that in, and no GST in the income statement. And going through the other items here, there are no more revenues. Now I've put that number in the second column. You can put it in the first column. The columns aren't important. It doesn't matter as long as the information's there. I just put it in the second column because that is now the only item in the section, and therefore this is the second column is my totals column, and that's the total. So to make your life easy now, rather than try and go and plonk all these in one by one, so you're not sure how many lines and that you need, I think you want to think, well, what's the next section? I want to look for sales returns. Sales returns would go here, and then we'd say that would equal net sales, but there are no sales returns. But it doesn't matter, there might be on another question. That's why you need to know the order. The next thing would be, I'm looking for my cost of goods sold. Okay, that's always going to be there. We can't have a question in our subject without it because we're a trading business. So I'm looking for cost of goods sold, and they are any cost required to get the inventory in a condition and location ready for sale. So discount expense is not one. Wages aren't cost of goods sold. Neither is inventory write-down. We don't know what these are. We'll talk about those in a second. And depreciation is not either. So that just leaves cost of sales. And again, I'll just put it in the second column there just because it's now the total of the section. So it goes in the totals column. Now, we need to know what comes next. Revenues less cost of goods sold equals gross profit. All right, estimated, that's just because it is a budget. So it's not the actual gross profit. Do you need to write that? Not at all. That's just to indicate to you that it is a budget for the future. This hasn't happened. It's just estimated to happen. And we got that number by taking our credit sales of 630,000 and subtracting away the cost of sales of 300. And we got an estimated gross profit of 330,000. So now we need to think, what's the next section I need to look for? The next section is I'm looking for anything to do with inventory adjustments. So that could be an inventory gain, an inventory loss, or an inventory write-down. And if I make my way through this information, I can see I've got an inventory write-down here of 10,000. So I'm going to write less inventory write-down. And then what we call that is an adjusted gross profit. Again, I've used the word estimated. How did we get this number? We take our gross profit of 330 less the inventory write-down of 10 equals an adjusted gross profit of 320. The next thing we need to look for are other revenues. They are revenues the business earns from selling from other than selling inventory. So the main ones we deal with are discount revenues and interest revenue. And we can see here we've got a discount expense. That's a different thing. So it doesn't look like we have any other revenues. So we can go straight to our final section, which is our other expenses section. And it's all by the name, obviously, all the other expenses that haven't been put in previously in cost of goods sold or our inventory adjustments. So the first one is discount expense, and it says it's 2% of credit sales plus GST. So we can go and calculate that by getting 2% of this figure here plus the GST. Now, the thing here is you can do that, or you can go to, I think it was question 3B, where you did accounts receivable, and we've already calculated that. So we're going to put that number in, and when we did it, we got 13,860. So that is now the right answer that we plonk into our section here. So if you did want to calculate that again, you just get your calculator and do 630,000 plus GST, so that's 63,000. That's a total of 693,000. Times that by 2%, and we'll get 13,860. The other reason you probably don't want to do that here is that you've had to do the same calculation twice, but you also want to go back to whatever you put in your accounts receivable ledger as the number, that is the right answer. So if you got that wrong earlier, you can carry that answer forward here, and it is now the right answer here. Next one we've got is wages, expenses, paid. Why does it say paid? It doesn't really matter whether it's in paid here, it's just whether it's incurred. So that's actually going to come up on the next question. But for now, we can just assume all these wages, expenses have been incurred and paid, so that will be other expenses. This is the old one, and the only reason I put this in is because it was on the exam one year, many years ago, and you just never know whether it's going to pop up again. We don't even know what these are, okay? Do they have GST, do they not? That's going to be important in the next question. But what we're going to say is, I don't know, maybe it's just miscellaneous expenses, and we've already got an other expenses section, so where do we put these? We're just going to put them here and say, whoops, there, other expenses of 40,000. So really, yeah, that was a bit odd, I remember on the exam that particular year, but you just plonk it in there. That doesn't need to have a name other than other expenses. It looks a bit weird because we've got other expenses, but that's okay. And then finally, we finish with depreciation, and that is another expense too. What we've got to do now is we total these four numbers up here and write the total in our second column, our totals column, and then we'll get our final net profit of 134,140, and we got that by taking our estimated adjusted gross profit here and subtracting away these other expenses. So the marks for this one, I gave 1 mark for the credit sales, I gave 1 mark for the cost of sales and the estimated gross profit, 1 mark for putting in the inventory write down in the right spot and then getting an adjusted gross profit. 1 mark for the discount expense, just because that did require a calculation if you did it again. 1 mark for both the wages and the depreciation. 1 mark for other expenses and putting the total of all the other expenses. And then finally a 7th mark. The final mark was for putting in the correct net profit.